Alright, somebody asked earlier, yesterday to be exact, they asked a question about what do you do when you buy above a bar like 835 on the 11th, put your stop one tick below, you're betting on a trend from the open, and somewhere in here you realize price is in a trading range and your stop is one tick below the low of the day where there's going to be probably be buyers. Well, in other words, what he's asking is, you're in, once you realize you're in trading range and you took a trade, what do you do when your stop's at an obvious magnet in the trading range? When you, or better yet, when price transitions to a trading range, when you entered the trade, you didn't think it was a trading range, and now it's transitioned to one. So, you know, that's really not an easy answer. There's many ways to go about it, though. So one method is very simple. You buy above this bar. Zoom in a little bit. You buy above here, put your stop below. You go for, maybe you take 25 or 50% of your position off at 2 times your actual risk, and maybe another 25% off at 2 times your initial risk, and swing the balance. And that's assuming you get a trend from the open similar to this, and then on a day like today you get stopped out, you just take the loss and you look for the next trade. The other, or you could do that, and that first option I said, a lot of traders I think who bought above here would get out below here. That's what I did, and I ended up, so there's really there's no perfect way. There's no really right or really wrong way. The other issue, and this particular person, he asked, what if you buy here and you buy more at this low? And that, a lot of traders do that. They'll buy here, they'll buy this close, buy above bar 1, they'll get out at the lower bar.
Let me take a look at ticks.
Had to pause the video for a minute. But yeah, so one method is you buy above here and you buy more where the bulls will get out. And that, a lot of times in a trading range, obvious stops are always a magnet, and they'll fall below it, turn up. They'll fall below this bar 1, they'll get to the moving average and turn up. It's very common in the trading range. So if you're going to do that option, if you're going to buy here and buy more at the low and use a stop to measure to move down, at least a measure to move down, you need to trade small. A lot of traders go wrong because they
At the target, so
a lot of traders mismanage because they end up trading a position too large for their comfort. They say what they do, they have a great idea and their management is good, but when it comes time to execute, they don't do what they should. So maybe they trade, if they trade 4 contracts, maybe they, the obvious one is they buy 4 here and put their, risk twice as much as they normally would, and they say, okay, I'll just buy more here, I know I won't get stopped out, and I'll risk down here. Well, that when they buy here and then they buy more here, they realize how large their risk is, and if they got stopped out, they'd lose far more than they normally would, which causes them to shorten their stop, and they get stopped out on the low tick. And then they're shell shocked into, they're taking such a large loss that when it comes time to buy again, they can't do that. And by the way, if it's perfectly okay to buy above, get stopped out here, and then re-enter. Traders do it all the time. I do that. Actually, I don't mind doing that because it keeps it simple. So to answer this person's question, yes, it's perfectly logical to buy more, use a wide stop, and if this bar closed on its low, to exit. So what about today? First off, you have a pretty strong bull trend. It's climactic.
bar 36,
A lot of bull bars, so we're probably not in reverse. Probably have to go sideways, but I don't think we'll get a lot more on the upside. Anyways, look at today. Same thing. You buy above bar 1, maybe you get out here, maybe you get out on this close, or you just get stopped out below this bar. Maybe you go short, but if you go short, you really got to get out here. So the reason for that is it's a test of the moving average. This was very weak, and when it tested the moving average, but here you can see the bar 1 low is further above the moving
Globex
average.
getting near the 50.
So yeah, bar 1's further above the moving average. So in this case, I would not, if you buy here and use the stop and measure to move down, I'd be very careful about that. I'd use my stop. I'd probably put a stop further down because of the risk of price touching the stop and turning up. So realistically, I would wait to see price break below the moving average, such as here, and close on its low. In this case, close on its high. So this bar and this bar are very similar. It's a breakout pullback buy. Look at cash index. Breakout pullback buy. It's really just 50% pullback. And that was all it was. So I hope this helps.